In this section, I just want to discuss a little bit about the different classification of costs that we as accountants find practical. And I'll start out by just saying that if we have a company that has incurred $500 in any period, if we treat this as the total costs that have been incurred, then we can break those $500 in many different ways. One very practical classification or distinguish is to say whether those costs are related to production or manufacturing related, or are they non-production, non-manufacturing related. And if they are production related, then the benefit is that you are able to capitalize those costs. And what I mean by that is you're able to record it as an asset until that item is sold. And then at that point, when that item is sold, then you would recognize an expense and at the same time recognize revenue for the sale of the item. So if we make this distinction of production related versus non-production related, keep in mind that we're talking about the summation of that would be the $500 of total cost that that we were initially started out with. In terms of production costs, we could look at production costs from the perspective of whether the cost is direct to the cost object or the item that we're manufacturing. And if it is, it's either direct materials or direct labor. Or if it's not easily traceable to the cost object, then we would classify it as manufacturing overhead. And if we were to sum up these three factors of production, they would sum up to the 300 that I am referring to right here. And by the way, the 300 and 200 was randomly chosen to add up to 500 over here. Another common classification is the prime cost, which is the summation of direct materials and direct labor. And then the summation of direct labor and manufacturing overhead would be referred to as conversion costs. Another classification or breakdown that we as accountants find very useful is the one between variable cost and fixed costs. And we could be talking, if we were to break this down, we are still talking about the same $500. Keep that in mind. So if it's variable cost, it's identified as such because any changes in production or activity result in a total change of cost. So if that is the case, then we identify it as a variable cost. If total costs stay the same with changes in production, then we refer to it as a fixed cost. The other thing to keep in mind is that if we're talking about variable costs, this is going to include both production-related variable costs, such as these, and such as a portion of manufacturing overhead, which may be variable, but it also is going to include variable costs that are non-manufacturing. So this variable cost classification includes both amounts from manufacturing and non-manufacturing. Same thing with fixed costs. This will include manufacturing and non-manufacturing. And hence, the summation of these two end up being 500 as well. Another common classification is to look at the costs from the perspective of the financial statements. So if we are, again, discussing $500, we could break it down between what has expired and what is unexpired. And if it has expired, then it would be on the income statement as an expense. And any amount that has unexpired would be on the balance sheet as an asset.